This is the AgriTalk video supplement for the week of Monday, December 28th, in which I cover three markets today. March Kansas City wheat, also a little bit of Chicago, March cotton, and February live cattle. As I mentioned in the show, I'm not going to get too deeply on Chicago. It's going to be more Kansas City. But, I mentioned in the show how the Chicago, now this is the Kansas City wheat, by the way. I'd mentioned in the show how the last month and a half, Chicago's put out a couple of meaningful long-term buy signals with no follow-through. In fact, the market gives it back. All the while, Kansas City's been holding, in textbook fashion, really, a long-term channel structure that goes back 4 or 5 years, and it's at 587.5 this week. We did settle just above it last week, but I should actually clarify that. We settled well inside the 1% violation threshold, so it was a no-go. It was not considered a reliable buy signal, and here we are. The market is backed off 12 cents as I speak. And so 587.5 is the point that this contract, March Kansas City wheat, needs to settle above on Thursday at the end of the week by at least a 1% margin. In other words, 593 or higher on Thursday settlement should spark follow-through buying. And I'm going to say even in Chicago, because Chicago's been reluctant to follow through. And I think by that point in time, if Kansas City follows through, Chicago probably will as well. And I would then be talking 768 and a quarter. This long-term 3/8 Fibonacci retracement level from the 2008 high against the 2019 low. And I think that would be a realistic summer 2021 objective. You've got a double channel top here that I do not have illustrated. It's up in that vicinity. 768 and a quarter becomes a long-term objective if we settle Thursday above 593 even March KC wheat, which is a 1% violation beyond 587.5. Until then, this contract, March wheat, and then the following, the May wheat and so forth, can fall back into this 526.5 to 536.5 region over the next month or so, where we can bottom out into spring trade. We could actually trade inside 526.5, 587.5, that 60-cent range for months to come. Closing below this area would tip the market south into next summer. Let's talk, what do we have here? And that is the same chart. Bear with me. I'm going to move on. Oh, here's Chicago. I'm not showing Chicago resistance, but I am showing Chicago support, that unless the March Kansas City wheat contract shows its own long-term buy signal, Chicago could fall back into the 560s, 562, able to absorb selling through winter. And in fact, no good reason to sell, I think, Chicago Board of Trade wheat long-term, that is to say, into spring, summer of next year, unless we close below 562 even. I think at this point in time, we also have a bit of a channel structure here in the same vicinity. And yes, we do. This is all lining up nicely. This is an area that can absorb selling through winter and into spring. And from here, the market can rotate back up. So, Chicago finds good support at 562 even. And as I say, no good reason to play the short side longer term in Chicago wheat unless we close below 562 even. And then I'm looking for probably another dollar decline per bushel into the 450 to 475 area over the following 6 to 9 months or so. Let's move on to cotton. I have been bullish cotton since September. There was a long-term buy signal. I think I can draw that here for you. And that was really above this structure here. Yeah, that was in the middle of September. That was the buy signal. Right now I'm saying the broader cotton market remains clearly bullish into spring, summer of this coming, above 69.37. I think I mentioned 69.50 in the show. There's no way we're going to test this in the next week or two. Well, careful what I say, right? But no, I'm not expecting that. In fact, I would say, the broader wheat market remains bullish into next year, above 69.37, and I ultimately anticipating this 92.5 area. On the way up, though, of course, I show this in this previous chart, we do have a Fibonacci retracement level from the 28 to 2018 high here to the recent 2020 low. We rallied to within 1% of it a few weeks ago. It's there at 78.04, needs to be settled above on a weekly basis. and then that 92.5 target is likely to be realized within 3 to 5 months or less. 92.5 able to contain broader cotton market buying through 2021. Right now, let me just re-clarify cotton. While it's bullish long-term, expecting 92.50 by the end of 2021, over the midterm time horizon, really through February, possibly into spring, it's kind of in a two-sided framework right now between 78.04 ceiling and 69.37 floor. We could fall back into this zone over the coming weeks, where I would expect the market to bottom out into spring trade, and from here, new highs within a matter of several months. And as I say, I am ultimately expecting a violation of 78.04, and if over the coming weeks, the 92.5, which is right about where this pencil is, becomes a 2 to 3 month, 3 to 5 month objective, where once again we can top out through 2021. And finally, February live cattle. This is the weekly chart. This 122.22 formation has been a target since July, when we had a long-term buy signal that is not presently illustrated. Right now, long-term support, 104.50, if tested over the coming month, 2 or 3, can absorb selling into spring trade, and above which I'm still holding on to a 122 handle longer-term objective that, if tested over the coming month or 2, can absorb buying well into 2021. This 122.22 area, good hedge setting territory. If we were to close above it, we do have a significant buy signal. I'll keep you apprised of that, I assume. But let me just say, if you haven't subscribed to my free trial, my 2-week free trial, go to my website, fill that out, and I'll send this stuff to you for 2 weeks anyway. Let's talk near term with regard to cattle, live cattle, February live cattle. I have a ceiling at 117.27 that can contain weekly buying pressures. From here, we could fall back to 109.70 over the next month or so, late January, early February perhaps, where we could bottom out on a monthly basis. So you could say that for the next month or 2, we're in a two-sided framework between 109.70 floor and 117.27 ceiling, but odds favor a violation of 117.27 given my longer-term target well above the market at 122.22. And if we settle above 117.27 at the end of this week, 122.22 just about 2 to 3 weeks away, where, as I say, we can top out well into 2021. And that's really all that needs to be said for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.